Well, trust you enjoyed your morning tea. Our next session is entitled Bank on It. Many of you will recognise the name. Of course, it's the name of the annual customer trends research that the ABA and Accenture come together to compile, released every year. Those of you who read the 2024 Bank on It will remember it was an absolute page-turner and it had a real cliffhanger ending. Well, today we find out where to on the story of customer trends in Australia. Our panel of Hessel Verbeek, who's the Managing Director of Accenture, Taso Corolis, Chief Customer Officer for the Bendigo and Adelaide Bank, and Melos Sulicich, who's the CEO of Bank Sydney, will be expertly guided by the one and the only Deputy CEO of the ABA, Vanessa Beggs. Give Vanessa, Hessel, Taso and Melos a round of applause as they make their way to the stage.
So here we are, year 3 of our Bank on It report. You will all find a copy of this on your tables. There's a lot to get through and we certainly don't have time to do a page turn, but what we are going to do is dive into some of the key items. Now Hessel, this is the 3rd year that you've partnered with us and collaborated with us on this. Can you take us through some of the headlines?
Yes, thank you, and pleasure to be here, 3rd year in a row. 3rd year in a row that we've got Adam being an excellent MC as well. So it's a good habit to get into. So we started this report really to look at, first of all, what are customer trends, and secondly, how are banks, catering to, the customer needs as well. So we're seeing some interesting trends develop over the last 3 years. So if we start with, first of all, the economic background for banking, 2 things jump out this year. And one of them is that, with 3 years of sustained high interest rates, Australian consumers are by and large, weathering that period really well with arrears, remaining stable. Having said that, lower interest rates certainly provide an opportunity for especially mortgage holders to start eating into their principal and reduce their interest payments. So that will be very welcome. The second really interesting in terms of the background, we'll get into more of this later, is how actually net interest margins have remained stable despite higher interest rates in a sign of sort of competitiveness in the market. And then when we see, really how customers bank, want to focus on 2 things that jump out. First of all is, what do customers value in banking? And then as well, the digital interactions that we always focus on. So Accenture's global consumer banking study shows that, consumers globally really choose a bank based on data security, transparency of terms, customer service, and competitive fees. But where Australians really, do differ is that much more than our global peers, we focus on rates and we focus on fees. So Australian consumers are value shoppers when it comes to banking. That really jumps out. The other one is obviously the increase in digital interactions. Since 2019, we've seen digital interactions grow, so online and app, by about 70%, which drives that the overall interactions with our banks have jumped by about the same number. So that is really strong. And what is pleasing is that, again, when we're looking at our global study, Australians are very satisfied. 66% of Australians are very satisfied with their app and online channels, which is much higher than the global average of 60%. And then finally, the point that jumps out is how we pay. We've seen a slow and steady decline in cash payments and ATM usage, and we've seen explosive growth in mobile wallet payments. Last year was the first year that value of mobile wallet payments overtook ATMs. This year it's 50% higher. So that's a really big trajectory and interesting to see how that pans out in 2026.
Thanks, Hessel. There's certainly a lot to cover there, so let's maybe take them in turn. We might start with digital and the customer obviously needing to be at the centre of everything that we do. And we might use a few visual prompts as we go through. If this wants to work. There. Oh, too many. Back one. Thank you. So, Melos, the Bank on It 2025 demonstrates that digital banking boom is thriving. 99.3% of transactions with a bank are now digital, and chatbot use has surged 1,800%. So talk to us about the modern day customer. What do they expect now from their bank?
Thanks, Vanessa. Let me just start by saying thanks for having me along. And also to thank you and Anna and the ABA team for putting this conference on. I know they're not easy to do, but I think you can see by the size and quality of the audience here that it does add value to the banking industry in Australia. So thank you for that. But customers, what do they want? More, faster and cheaper, or a better price, a better rate, I should say. And Hessel covered that. But I think the other interesting thing, and I'd sort of prepared some notes on this beforehand and then listened to the discussions yesterday. People want all that. They want AI. I think now your app is sort of taken as a given, but they want human interaction. They want human connection somehow, or connectedness to a bank in some way, shape or form, either through a brand. They want to be able to phone a call centre and talk to a real person in need. Chatbot is increasing, as you said, by an extraordinary percentage off a low base. It's still got a long way to go. I think those percentages will be with us for a long period of time. But they want a lot. Relationship's important with a human touch. AI is important. Speed and simplicity. Ever increasing speed. I mean, I remember 30 years ago, the nirvana for a retail bank was to be able to get a conditional approval in less than a week. You know? Now, if you can't do it in 24 hours, you're really out of market, right? So speed and simplicity, something easy for people to see and deal to. Emotional connection and advocacy, I spoke about. Hyper convenience, automation, like it's got to be faster. I've got to be able to do it on my app or on my phone. I've got to be able to talk to someone either by chat or easily get through to a real person. People are looking for that. And let's not forget sort of the come to work items, security. Right? Everyone wants data security, needs data security, doesn't want it, need it. Transparency. Hessel spoke about competitive pricing. You'll see in the report fees. The proportion of fees of banking revenue is just on an inexorable decline. And when you hear from customers about what they're looking for, they want to pay less on fees. They don't understand why should be paying fees. Trust, another word that we spoke about yesterday. People are looking to trust their bank. Some years ago, there was a cliche that said, people love their bank but hate banks. I think as an industry, we've gone a long way over the last few years to change that. People don't hate banks anymore. They understand that everyone needs a bank and actually trust their banks, not just their own bank, but the banking industry. So I think what we have done as an industry to give people that trust and view of the industry, I think is very good. And people are looking for us to maintain that. So there's a whole raft of things that people are looking for. Some of them come through in the report, but in short, more, and at a better rate.
Yeah, great. But not all customers are the same, right? So a lot of them are certainly wanting more. They're wanting things faster. They're wanting their bank in their pocket, on their mobile phone with them all the time, but not everyone. So Taso, what about those that don't want that want more the status quo? I mean, what are we doing, or importantly, what are you doing to make sure that regional, elderly, vulnerable customers aren't left behind?
I think that's an important distinction. We need to be cautious not to categorise. And if I look at regional Australia as an example, I don't know that it's as well understood that regional Australia contributes about 2/3 of Australia's GDP. There's over 10 million people living in there, in the regions, and it's growing. We saw that pre-COVID, and COVID accelerated the shift into regional Australia. And regional customers, their banking needs vary. They're not homogenous. When we look at the information in the report, we are seeing a shift and a trend more towards digital and online services. What we're seeing through our network, and we've got the second largest physical distribution footprint in regional Australia, is customer preference is for simple banking services and simple banking needs to be delivered digitally. They don't want to be forced to do something, and customer choice must have primacy here. But for the more complex needs, they're still valuing, and Melos touched on it, the face-to-face interaction, whether that's in branch or whether that's a banker going out to see the customer or the business or the farming enterprise. So it is quite mixed. We expect that will continue to shift, where the role of the branch primarily will be for the more complex interactions with our customers. And we're investing technology and people in making sure we can meet those needs. I don't want people to think that technology or people is mutually exclusive. It's both. Technology definitely enables our physical footprint, our digital channels to deliver better offerings to customers, but our people are central to that delivery mechanism as well, so they're not mutually exclusive. In terms of customers who are challenged with using digital or online banking, whichever way we want to describe it, I think there is a role for the banking sector and for us specifically, given our footprint, to make sure financial services continue to be accessible and inclusive, and that is a challenge, I think, across the sector. Education is part of that. Simplifying the avenues is also a part of that. For some customers, they can navigate the simple, whether it's digital. Most of our elderly customers, as an example, and again, I caution, I don't want to generalise, because we've got many elderly customers and all they want to do is interact digitally. They don't want to come into a branch or speak to people. But how do we make that experience simpler? Security is a big challenge. We need to make sure that our customers and customers across all the banking sector feel comfortable that when they interact with us digitally or online, it's secure. And part of that involves education. So by way of example, since around September 2003, we've done 400 education sessions out in our branches, in community centres, trying to help customers navigate the digital world, help them be more attuned to what a scam and a fraud looks like, because they're obviously big issues. And I know the sector more broadly has done a lot around that. So access, inclusivity, making it easier for customers and safer for customers, I think is the way forward for that.
Great. So it's a lot about choice.
Correct.
Enabling people to sort of choose their own path. And that path's not just for transactions, but obviously for lending as well. And in fact, another important takeaway from the report is that lending to regional businesses and first home buyers has increased, indicating that banks are really leaning into the real economy. And we've heard a lot over the last couple of days about productivity in this country, for our own businesses, etc. So, Melos, perhaps back to you. As the government pursues this productivity agenda, are there further steps that banks, regulators, or indeed policymakers should be taking to better channel finance into productive growth?
Yeah, thanks, Vanessa. Yeah, look, you're right. The report shows that banks are leaning in to regional communities, and banks are leaning into to first home buyers as well. And I think long may that continue. I do think the Australian economy, I think John Lonsdale sort of hinted at it earlier, that it's getting tougher for first home buyers. And there is a statistic that says your average wage earner in Sydney can't afford your average house in Sydney. Right? That's something that, as a country, we should not be proud of. We should be looking to create an environment where young people can live the Australian dream and get into be able to afford to get into a house, and less than the average wage earner should be able to find their way into a house. But across the industry, we're leaning in. We are doing what we need to do to get finance to those people that can afford it, that can afford to pay it back. I do think not so much regulators, but I think government and policymakers need to think a little bit about the structure of the way the Australian community lives, we work and operate. And I think with the government that's just had federal government that's just had a very large, very large majority in the House of Representatives, and looks like they're going to be there for a while. They've got an opportunity to really think about how we as a country are structured, and I think investment in regional communities and creating an environment where businesses can invest in regional communities outside the capital cities, to build industry outside capital cities, and therefore be able to build housing to support that industry outside capital cities in a more affordable area and an affordable sense, I think will help the country with our next phase of growth. We can't just keep shoveling people into Brisbane, Adelaide, Sydney, and Melbourne, and assuming that we're going to have the housing there to support the country. So I think trying to get outside of the capital cities and build industry in regional areas, I think is if I was sitting in the government, something that I'd be thinking long and hard about. As banks, we'll keep lending to those people. We'll keep leaning into those economies. They are the backbone of Australia. They have been since Australia was founded a couple of hundred years ago. The regional Australia. We live off the regions. We heard last night. We dig it out of the ground. We grow it on the ground. We have tourists come in. 3 of the 4 biggest economies that we've got rely on the regions, and so I think investing and developing those regions, I think, is important, very important for the future of our country. Yeah.
Thank you. Now, hand in hand with productivity often goes innovation. So, Taso, as a regional bank, how do you keep pace with the speed of innovation that is required in order to meet growing customer expectation?
The short answer is you have to, otherwise you lose relevance. So at Bendigo, we've got, I think, a pretty strong track record in innovation, and I think what's helped that to a large extent is being regional and having a large physical footprint and a digital bank in Up. And so we are very close to our customers, and our customers and our customer-facing people are very quick to say, hey, this is a need, what do we do about it? So if I give a couple of examples, and probably one of the better-known ones is our partnership with community banks. That was quite innovative. That was structured at a time where branch physical services were reducing. We partnered with communities. It was the only such example and such model, not just domestically, but globally, and it's been a tremendous success for our bank. If we then look at what we did in partnership with Up, that was taking something quite almost novel, and it was solving a customer need. It wasn't the bank saying, we want to be the best at digital. It was, what is the need? And the need for a cohort of customers was helping them with their money. So how do we simplify money? How do we take the complexity out of it? And how do we help a younger cohort of customers improve their spending, their financial literacy? So I think the key thing for us is innovation must come from a customer need rather than at an exec level us streaming what we think is going to work. So you've got to listen to your customers and you've got to listen to your people that interact with customers. The other part that's been successful for us is partnering. As a smaller bank, we don't have infinite resources, and we need to identify partners that have similar values, similar purpose, and partner with them to help us innovate. So we will come up with the ideas, we will work with partners to deliver that for our customers and our people. And some other examples, so if we look at the first half of financial year 25, 1 in 5 of our residential mortgages was originated through a digital channel. And we're a regional bank, we've built these capabilities internally, we've partnered with other companies. So I wouldn't want people to think scale is an impediment to innovation. It creates a different pathway, but at times it probably makes it easier to innovate because necessity is more confronting.
Well, let's stay with that for a minute. So you've talked about the importance of customer choice. You've spoken about what you're doing with Upbank and the digital journey there. But when we look at the data in the report about what's happening with branches, the report shows us that branch interactions are down 50%, but that 74% of Australians still say branch proximity matters for trust. So are branches becoming symbolic rather than functional? And how do we respond to that as an industry?
I think there's an element of symbolism with a branch, and we see that in the report that we're looking at and is up on the screen. We see that with numerous studies globally as well, where a cohort of customers who frankly never want to step foot in a branch associate trust with a branch. And so I don't think I can sit here and credibly deny that there's an element of symbolism. The role of the branches, though, is fundamentally changing. We are seeing through the numbers in the report, we're seeing it through our own numbers, that the more simpler transactions, by and large, the majority of our customers would rather not have to go into a physical branch or even ring the bank to solve. They want to be able to solve that themselves. They want self-service is really important. Again, anchoring with choice. There are some customers where that isn't for them, but by and large, the vast majority of customers are viewing ease, and I want to be able to choose my pathway. What we are seeing in branch with our mobile bankers, our business and agri, is for the more complex needs, they still value human interaction. And again, if I go back to my earlier comment, technology and branches shouldn't be viewed as mutually exclusive. I think the way branches are structured and the business that occurs in them will continue to profoundly change, and it'll be the more complex needs that'll be supported with human interaction, but enabled through technology. And we're seeing that play out now. It's not me trying to predict the future, it's happening today, and today's interactions are different to yesterday's, and that trend will continue.
Thank you. Now, Hessel, let's try and link a few of these things together. We've talked about changing customer needs and behaviours, the importance of helping drive productivity, the need to continue to invest in technology, in innovation. All of these impact performance. And there's regular commentary about banks' profits. But our Bank on It report shows that net interest margins remain modest and lending remains highly contested. So is this a sign that competition is stronger than critics might suggest? And why has Australians' NIMs remained stable despite rising amongst our global peers?
Yeah, thanks, Vanessa. And it's a really interesting point, and some really welcome comments, obviously, from John Lonsdale this morning around greater competition in Australian banking. But when we're looking at the data, is that while the major banks have a combined market share of more than 80%, that does not translate in interest margins that are high by global standards, suggesting a high level of competition. So first of all, if we're looking at the data around net interest margins, at well below 2%. We are on the lower end of the scale compared to a whole host of other global nations, Singapore, US, EU, UK, Canada, etc. So we're on the lower end. Importantly, if you're looking at the last 20 plus years, the trend in NIMs has been very consistent. It's slow and steady coming down. And unlike in some other countries, what we're seeing is that periods of higher interest rates do actually not translate in higher interest margins. Whereas quite a few countries in the last couple of years, you've had an increase in NIMs. We're not seeing that in Australia. So, the data says, interest margins are modest. And if we unpack, what is behind that, it's first of all, and we see this as well, the work that Accenture does in the market is that banks are, competing heavily both in lending and in deposits as well. And that is not just between the majors, but it's also from the mid-tier and the smaller banks. And probably one of the things behind that is, again, in the consumer study that I referenced earlier, we saw that Australians place great value on rates as well. And what is clear is that an Australian mortgage holder, for instance, will switch banks if they can get a better deal. So it's keeping the banks honest. And a big part of that is, of course, the fact that the vast majority of mortgage holders go through the broker channel, and brokers sort of further fan that level of competition as well. And I think the final point that's probably contributing to these modest margins is what John Lonsdale called out as well. Australian banks, are very highly dependent on mortgage lending compared to global peers. The most exposed market in the world, and we don't have a lot of institutional banking. We don't have that diversification. So mortgage lending is more commoditized, is lower margin. So all of those things contribute. And if you then take the consumer lens, is Australians benefit from the fact that we've got a competitive market and a market where competition is focused on rates as well. So the upshot of that is that Australians get a good deal from their banks.
Please.
I think my mic's been turned off because I was coughing into it. My apologies for that. One of the things also the report highlights is that Australian consumers are on average more satisfied, right? And what Hessel just said, I think Australian consumers have got good reason to be satisfied with banks. I mean, it's a competitive industry. We give great value. It's not to say that we can't do things better. I think Taso highlighted that, and these numbers that we see here are all averages. They're taking a lot of people and taking a view, and you get to 90%, and it sort of it feels good, but it's the 10% of customers that we need to look after. And so, yes, it's an industry where we look at us across the population. But we can't afford to let the individual go or forget that it's about looking after the individual, and it's their experience with a bank that really matters. And whatever we do in developing the systems and processes and the industry that we've got for the future, we have to really look after them. But really pleased to see that on average, Australian consumers are more satisfied with their banks than the rest of the world. I don't think you would have seen that a few years ago.
Yeah,
That's
absolutely.
a really good outtake for me.
Yeah, so we're changing, the customer need is changing, we're meeting that customer need as best we can, but is the regulatory architecture changing? So we heard some very welcome news this morning from John Lonsdale of APRA, and we look forward to hearing more about that. But Melos, let's stay with you, and this will be our last question before we go to the floor, so if anyone has a burning question, get that ready. But what are the biggest gaps between Australian banks and how they're regulated, and what's the cost of letting that gap widen?
Yeah, we heard it from John this morning about some regulation. I think the best speech we've had in the last 2 days was Joe Longo's speech yesterday, where he said less regulation and more simplicity. So I'm a regulation light sort of person, and think that as an industry we should sort out our own issues, and as companies we should sort out our own issues. So I'm not heavy on the regulatory agenda. There are some things, I mean, regulations there. There are some things that we've got in our regulatory architecture that sort of relate to banking as it was, and not just banking, but payments in particular, as they were, where you can only do payments with a card. Now you've got wallets. You've got not only bank cards in the wallets, but all sorts of other cards in the wallets. So I think tidying up that part of the architecture around digital payments, and not just monetary payments from banks, but payments of other sorts as well, is something that the regulators need to think harder about and get together. And we need to ensure that not only banks, but all the other associated industries are also investing in that sort of architecture. And why do I think that's important? Is because it goes back to security, right? Looking after people's money, making sure the payment rails are right, making sure that they're protected from fraud and scams and those sorts of things. There's a lot of investment needs to happen, not just in the banking industry, but also those associated industries to make the whole architecture of that part of our industry safer and stronger for customers.
Thank you. All right, is there anything from the floor before? Oh, I've got one here.
Hi, Bettina from Armstrong Debt Help. Joe Longo spoke in his speech about trust, and he also spoke about the 785 Better Banking report that came out in July 2024. And on the 29th, the Beyond a Better Banking report comes out, which talks about what banks have done to remedy problems with First Nations consumers where they were not given the opportunity of going to low fee, no fee accounts. What do you think banks need to do in order to continue to close the gap and meet First Nations consumers where they are, and using AI for the good of making a trusted customer experience?
I'm happy to go there. Yeah. Taso, you might want to follow. That's sort of what I was trying to highlight before. If you look at stuff statistically, we do a really good job, but there are people that fall through the cracks. There are people that haven't caught up yet with technology and whatever. Some people have, some older people have, some people from various demographics have, but there are those that haven't as well. And like we've heard a couple of discussions around AI and how it can help. And people are looking for not only a great system and processes, but they also want the bank to know them, right? So you might have a bank with a few million customers, but every individual customer wants the bank to know and understand them and what they're doing. And I think AI in particular is an area that we can all use to be able to identify those issues and those people that are not standard, because they're the ones that we need to look at. Everyone's got a right to have a bank account. I mean, 99.3% of Australians have a bank account, amongst the highest in the world. Everyone's got a right to be able to use that account in the way that they want in society, whether it's digital payments, cash payments, or whatever. And we have to use whatever technology we've got to be able to identify those individual use cases and look after those people. As a society, we need to do that.
I might just add to that. Thanks for the question. I think from Bendigo's perspective, when we went through that review, clearly we identified we need to do better. And there were gaps at an industry level, there were gaps at our level, and we're seeking to do better to improve those gaps. Importantly, I think what it identified for us is a greater need of cultural awareness. And so we did engage a First Nations organisation to work with us in terms of what are the actions that we need to take to make a meaningful response. How do we engage with our internal Mob at Ben group to make sure we've got advocacy and that basically closing part of a cultural misunderstanding that we may have. So we have more to do. I think we've made some pretty good steps, but your point is really valid. I think technology can supplement and enhance. It's not the only answer. I think that cultural awareness and education is a big part of it.
Thank you. All right, so our panellists will be around a bit later if you do have other questions for them. As you can see, there's a lot in this report. It's quite data rich, so please take a copy with you or download it from our website. But join me now in thanking our panellists.